Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Hump Day. It's Wednesday, January 23rd. Hope you guys have a wonderful morning. We're halfway through the week on a short week here. We got just one item here on the economic calendar. Otherwise, it's a pretty quiet day today. We got the FHFA Home Price Index, also known as the HPI, for the month of November. So in October, we had a pretty good jump at 0.4%. Forecast for November was supposed to go up 0.3%. And it did go up 0.4%, so it exceeded the expectations, which is obviously good news for people who are homeowners. Now, this did increase year over year from 5.7 to 5.8%, so home prices are still continuing to rise. Now, a little note about the FHFA home prices index is that this is an index that gauges conforming loan properties only. It doesn't do cash or jumbo. This is just ones that have conforming loans on it. So this is kind of an index on that. So that still makes up quite a bit of the majority out there for home properties, but still kind of a gauge that kind of indicates that home prices are still rising, even though we had around this time period our higher interest rates at that point. So let's jump ahead here to the the headline news. Stock market's up after today. Yesterday, it took a little bit of a beating based on a macro level where the IMF redid the forecast and brought their forecast lower from 3.7 to 3.5. They were also talking about China having the slowest output on their economy since 1990, so like 30 years. Basically, yeah. So they're looking at the macro level yesterday, but today we had some strong earnings reports that came in, and so their mood has quickly changed to what's in the present. So that's obviously a good sign for the market today. So as a result, the bond market has pulled back today. We started off the day much lower, below the 25-day moving average. We were kind of between the Fibonacci level here as a ceiling, and then we had the Fibonacci and the 25-day moving average as our floor of support. But this morning we broke below that, and right now we're approaching that level right now, and we're up for the day, but down since yesterday, probably about 6 basis points so far. Um, so not quite enough for a price change yet, but I would have the finger on the trigger pretty quickly here. We also got the 10-year Treasury, which is also trying to break above its 25-day moving average here as well. So again, another kind of important note to watch here as we been below this 25-day moving average for a while. So since the rates have improved, it's knocked down the Treasuries and kept it down. But if it breaks above it, we got another approximately about what is it, about almost 10, well, I guess about 10 basis points before, or 10 points before it goes upwards. Not quite enough, but that would be translated probably another quarter point to the hit for mortgage-backed securities. So at no point could cost you another quarter if it ends up touching up here. All right, so that pretty much translates to no price changes from yesterday, but something we want to watch as the trend is looking like it could be changing for the worse for us as stocks and bonds are competing for investment dollars here. If anything changes, I'll post on Twitter. Just come over to Twitter, follow me at Mike Bjork, and you'll get your updates throughout the day there. You guys have a great rest of your day. Thanks so much for watching. We'll see you guys tomorrow. Bye-bye.